All right, welcome back. You got the market, which has come off, 30 points. That's it. So we are at 18,300. The high was 18,332 on the Nifty. But I think the basic drivers are all still looking very strong. When the IT index opened up 2%, it's up 4%. So from the opening level across stocks, as can be seen from the index, there has been a fair bit of move after the opening, so that opportunity was there after opening as well. What else? I mean, I'm looking at the top gainers. The IT index is kind of the sole driver so far. You got the real estate index, which has come into the mix, but that's far away with about a 1.33% gain. And you got the metals index, which has cooled off a little bit, but still 1.25% higher so far as well. Let's speak with the management of Apollo Hospitals, which has posted a good set of second quarter earnings with a 14% revenue growth, which is well above what the street was expecting. The company's hospital margins have also recovered significantly to around 20%, but blended margins this quarter have been pulled down by the digital health and pharmacy arm. Suneeta Reddy is Managing Director of Apollo Hospitals. She's joining us right now to take some questions. Ma'am, good morning. Great to have you with us here. Appreciate it very much. Could you start by telling us what are the drivers for the sharp sequential improvement in healthcare services revenues and margins?
So in the healthcare services, it was clearly the fact that occupancy improved. We moved from 60% in the last year to 68%. And I think that 8% increase has improved margins. The second is that, we're very consciously looking at asset utilization. The third is there is a cost-cutting initiative. And all this is, the fourth is, of course, case mix. And we will continue to focus on case mix. And with this, we will continue to see a margin expansion. So these are the 3-4 factors that really helped in terms of both revenue growth and EBITDA margin expansion.
All right. Hi, Ms. Reddy. Good morning. If you could give us a sense about the occupancy, what is it likely to be for the coming 2 quarters? And also medical tourism as a percentage of your business, what was it pre-COVID and what has it scaled up to right now?
So pre-COVID in the metro cities, we were 15%. Blended, we were about 9%. Currently, we're at 7%. So I truly believe that, there are many cities where the international flights didn't open up. And with the opening up of travel, we believe that we can close the year with about 10% of total revenues coming from international patients.
Okay. Suneeta, hi, good morning. As always, great seeing you on the channel. Lest we run out of time, I just want to get this out of the way. I know we ask you every single time, but nothing has fructified yet in terms of, long-term interest from investors, your fundraising plans for Apollo HealthCo. Anything in this calendar year itself?
In this calendar, yes. I think by the end of the year, we'll be able to share something with you. But more importantly, I think in terms of performance, 24/7 is way ahead of its targets. We had a GMV of 294 crores, and we're on target for 1,500 crores GMV, which is way ahead of the information memorandum. So I think, it's good to wait. These are times that it's better to wait to get a better valuation.
Okay.
And I think that the pharmacy, between the pharmacy and the hospital business, we are generating cash. We have free cash flows of 790 crores plus money in mutual funds that can definitely fund the growth for the next 2 quarters.
You said 1,500 crores GMV is what you're seeing in Apollo 24/7, right?
Yes, yes.
Okay, that's great. You had also, you posted a EBIT loss of around 140 crores in Apollo 24/7. That was last quarter. Have you been able to narrow those losses? And when do you expect to move to profitability?
So we're currently at 170.
Okay.
I think by the end of 23-24, next year we should be EBITDA neutral. And really by 26 we should be profitable.
Right.
But we are on the track to profitability, and I think there's been a growth in the number of registers users have moved up by 4 million over last quarter. We are doing 50,000 transactions by day, and absolute bill value has moved up to 1,250 rupees.
Wow.
So the metrics are all good.
Yeah, no, that sounds good. Ma'am, in terms of you gave us the GMV numbers, but what is the revenue that you hope to recognize from Apollo 24/7 for the full year?
It's 20% of less than GMV.
Okay.
Currently, this is what we're looking at.
So since the going is so good in Apollo 24/7, I wanted to understand what are the investments that are expected in the business. Earlier you had said about 550 crores in FY23, and earlier before that there was about 400-500 crores investments. Since there is fundraising coming in by the end of the year, what would be the total investments in the business, and what could then be the growth potential for 24/7?
In terms of total fundraising, if you look at what we've done and what we've capitalized, I think it'll be about 2,000 crores committed to 24/7. And as you must know, in this business, there's not much you can capitalize. So after the first year, it's all been captured in our P&L. And without any other acquisitions, the number is 2,000. And just going forward, I think next quarter I can share more numbers on where we're looking at revenue, but I do know that next year will be a bit neutral.
Ms. Reddy, what about the average revenue per bed? How do you see that shaping up from year on? If you could give us a sense of what it was in the first half of the year and where is it headed?
Okay, so in the first half of the year, it was about 50,000, and this is not including doctors' fees, which would make it 60,000. And so this is, I think, I think average revenue per bed is a healthy average revenue per bed because it is yielding 25.4% margins, and we were able to, improve our margins by 129 basis points. Going forward, we believe that the case mix will improve. Added to that, when we start getting international patients, we expect to see another 5% improvement in our ARPOB by the end of the year.
Okay. I also wanted, you said that occupancy levels have gone up to about 68%, and this is much higher than what you did in Q1, higher than what you did same time last year as well. Just trying to understand, is it more because of a pickup in medical tourism? Is that something that's a one-off? Is this 68% a one-off or something that you can perhaps sustain?
I believe it's sustainable, even though we did have a lot of medical admissions this year. But it is a sustainable occupancy figure because our target for the year is 70%. And I think Apollo is one of the unique hospitals where we have a high operating leverage and therefore headroom for growth. So even if beyond case mix, I think just increase in occupancy will result in higher EBITDA and therefore higher profits.
Ma'am, if you can leave us with a guidance on CAPEX as well for the rest of the year and 24.
So my guidance would be for 36 months because we are looking at adding another 2,000 beds and an investment of 3,000 crores. A recurring CAPEX for each year is around 300 for replacements, etc.
All right, perfect. Thank you very much. Good luck. Appreciate you joining in with all of that detail, and good luck to you and the business. Well, the market is